What is going on, investors? Hopefully you guys are doing well out there. Extraordinarily volatile market out there, and I could think of no better company to take a look at after they reported their earnings than Microsoft, ticker symbol MSFT. Over the last year, stocks up 31%. Over the last 5 years, oh yeah, you're just up 366%. So keep that in context when these stocks start pulling back. We are seeing Microsoft pull back about 2.6% during the regular session, another 3.5% in the after hours. I know this company typically gives guidance on the call that happens about 30 or 40 minutes after recording this video. So we'll see how the stock shakes out heading in tomorrow. We will talk about this from a technical perspective. Some really interesting stuff going on from a technical perspective when it comes to Microsoft. We'll talk about, is this a buy the dip opportunity? Is this a spot to jump in here with Microsoft? What kind of upside can you expect? What kind of maybe stop loss or downside can you expect if these levels don't hold and we go further down? Can we get even better buy the dip opportunities in Microsoft? Definitely going to talk about that on today's video. We'll get into the earnings. We'll take a look at how Microsoft did. We'll take a look at each of their little business segments. I say little, this is a gigantic company. There's nothing little about any of these business segments. So we'll talk about that as well, and then we'll jump into these financials. We'll take a look at the revenues, the profits, the cash flows, the balance sheet, everything that we need to know when it comes to Microsoft. Now, those Q2 numbers came in. EPS came in at $2.48. That beat by 16%. Revenue came in at $51.7 billion. We'll show that to you over here when we get to the financials. That was good for 20% year-over-year growth. Now, what we saw was in terms of Wall Street expectations. So you might say, well, the $51.7 billion, how does that match up with what Wall Street was expecting? Wall Street was expecting closer to $50.78 billion. So a little bit of a jump there. They were also expecting $2.32 per share, and I told you the company made $2.48 per share. Now, in terms of the different business units that they have over at Microsoft, I think the ones that people are often looking at are this Azure and cloud services. That's up a nice 46%. You wouldn't want to see it much lower than that, considering you got competition out there from Google and Amazon growing in that similar range. You got LinkedIn, man, 37% growth over there. And then the bread and butter business over at this company, the Office, the 365 commercial products, those are up 14, 19%. They passed on some price increases earlier this year. You should start to see them maybe a little bit in these financials, but more than likely Q3, Q4, you should see those start fully getting baked in, and that can help revenues and certainly profits as well in those business units. Now, let's get on to these financials over at Microsoft. Talk about how they came in with this $51.78 billion. That was on this 3 months ended. Last year, we were sitting at $43 billion. For the last 6 months, you've gone from $80.2 billion up to $97 billion over the last 6 months. Obviously, I don't need to tell you how fantastic this is and how there's less than 5 companies in the world that are putting up these type of top line numbers. We're talking about the Apples, we're talking about the Amazons, and that's about it. When we're talking about $100 billion over 6 months, that's absolutely amazing. Now, in terms of the cost of revenue, what do we love so much? What do we love so much about Microsoft is take a look. Off of $6.3 billion of cost, you generated this $20.8 billion of product revenue. Isn't that amazing? That's why we love this company. That's why we love this company in an inflationary environment. That's why we love this company in a deflationary environment. That's why we're looking to buy this stock on these pullbacks as this stock pulls back from its highs up here at $340. Now we're closer to about $275 on this one. We love that because of these mega high margins. Take a look at the service business, okay? These margins aren't as good, but they're still so good that they beat almost any company that we look at here on the channel outside of the aforementioned really Google, Facebook, and a handful of others. Now, in terms of our service revenue, we had this $31 billion in service revenue. Guess what? It only cost us $10.6 billion to get that revenue. This company is a cash flow generating machine. Our total cost of revenue, so off this $51.7 billion worth of revenue, this is in a quarter, we only had to spend $16.96 billion worth of money in order to get that revenue. I tell you what, even if these numbers were as written, and this was 51.7 thousand, and you had to spend about 17,000, you would take that any day of the week and you'd have an amazing small business on your hand. That gets us gross margin at $34.7 billion. So off $51 billion of revenue, $17 billion in cost. You end up with gross profit, or in this case, they label it gross margin, at 34.7. How does that compare to the previous year? Yeah, you were sitting at about 28.8, and we thought that was phenomenal back there. Now, we do see, obviously, when you have your revenues grow over at this company, you do see an increase on product costs and service costs. You went from 14 billion up to this about 17 billion. All things hold true for the last 6 months as well. You went from 25 billion up to 30 billion on your cost, so an uptick of about $5.5 billion or so. But take a look, our gross margin grew by $11 billion from 55 billion up to $66.4 billion. Now, they got other costs at this company, okay? They've got these research and development costs, they've got sales and marketing, they've got general administrative, but notice how these are not moving that much, okay? In fact, general administrative just went up by about $200 million. So on that operating side, you didn't see these costs go up that much. And so you take this $34 billion, you minus off these costs, and you get down here to $22.2 billion worth of operating income over at Microsoft. So let's just put this in plain English. Off of $51 billion of revenue in a quarter, after you pay all your expenses, not taxes, you get operating income, just operating the business, $22 billion. Guys, it really doesn't get any better than that. Look at, for the last 6 months, off of $97 billion, after we pay all our costs, all our employees, all the salaries, everything you got going on at Microsoft, you earn $42.4 billion. That's why we buy the dips on these stocks. We look to buy the dips, not anything less, because these are spectacular. Now, you do have to pay some income taxes. You have some other income. You come down here to net income of $18 billion off $51 billion worth of revenue for 3 months, off $97 billion worth of revenue. You cleared $40 billion, or $39.3 billion to be exact, in revenue in 6 months, not in the lifetime of the company, but in 6 months. You are earning on a diluted basis over at Microsoft $5.19 per share. Right now, the company is currently paying you $2.48 per share. We grew our earnings year over year from $3.85 up to $5.19. So yeah, you're going to get a dividend raise over here, and you probably can expect one for the next, maybe over the course of your lifetime, depending on how old you are. That is why you buy and hold this stock. You buy it for these earnings. You buy it for the mega high margins. You buy it for the fact that this company is going to be able to continue to grow its dividend time and time again. You only sell this stock when maybe you really have to. It's just something that is absolutely wonderful to own. Now we're taking a look at the balance sheet over here. This company at the current time has $125.3 billion worth of cash. Last year, they were sitting at about 130. They've obviously completed a couple of acquisitions. I don't think the Nuance acquisition has gone through on the balance sheet. And we obviously know from the most recent headlines over at Microsoft, they've just agreed to acquire Activision Blizzard sometime in their fiscal 2023. Right now, they're in fiscal 2022. They're in the second quarter. So it's not until maybe at the very earliest, the tail end of this year in 2022. More than likely, you'll see that acquisition close sometime in 2023, calendar year 2023 for Microsoft. That will, look, we don't know yet necessarily. Maybe on the conference call, they'll give us a little bit more color on this, how they're going to finance that $69 billion. Are they just going to minus off $69 billion right from the cash pile? Are they going to issue some shares of Microsoft? Are they going to take out some debt? We'll find out what Microsoft decides to do, likely at a later date. Now, in terms of long-term debt, the company does have a little bit. You went from 50 down to 48. They've got some short-term debt as well. That went down from 8 billion down to 5 billion. It looks like, and we'll see when we get to cash flows, this company has used some of their cash to pay down a little bit of debt, and that can be a good thing for Microsoft. Now let's take a look at the cash flow statement. Over at Microsoft, we pulled down that absolutely amazing $18.7 billion for 3 months. For 6 months, you pull down nearly $40 billion on that net income side. You get to add back things in like stock-based compensation, like depreciation, some other charges. You get for the quarter very close to $14.5 billion. For the last 6 months, you get a number almost identical to their net income. Their net income was $39 billion. and their cash flows from operations was 39. That is just unbelievable. Over the last 6 months, you do see that this company did repay about $5 billion worth of debt. They've also, it looks like they've used some cash for this common stock repurchase, about $15 billion over the last 6 months. Just in the last quarter, $7.5 billion. And you've got these dividends, which we talked about, again, $4.6 billion, $8.8 billion. So on this financing side, in a quarter, you had positive cash flows of $14.5 billion. You spent about a $12 billion repaying some debt and paying dividends. For the last 6 months, you've earned $39 billion in positive cash, and you've spent about $28 billion on repaying some debt and buying back shares over at the company. Now, in terms of investing, they spent a little bit on property, plant, and equipment. And I say a little bit, $5.8 billion in the quarter. Over the last 6 months, about $11.6 billion. They did some acquisitions. They closed on some at about $12.8 billion over the last 6 months, about $2.5 billion in the quarter. You see that they did profit from some investments as well, some sales of some assets. All things being considered on that investing side, in the quarter, they burned through about $1.1 billion. No big deal. Over the last 6 months, burned through about $4.4 billion. The reason why I say no big deal, right, is because you have $39 billion worth of positive cash flow. You minus off $28 billion after you pay some debt and you pay some dividends and you buy back shares, and then you pay another $4 billion in investing activities, and this is about $32 billion off of $39 billion in positive cash flows. Paints the same story for the last 3 months. $14.5 billion worth of cash provided by the operations. You burn through about 11 or close to $12 billion on share repurchases and dividends. And then you do another $1.1 billion in terms of investing activities. All things being considered, this company is as financially healthy as you can possibly find in the stock market. And we are seeing the stock pull well back from the highs it made literally just back in December. This stock was up close to $345 per share, got nearly as high as about $350 per share. Shares have promptly gone on a ski slope and have come crashing down to about $275 per share. Now, I've got this black line in here. This represents an uptrend. Earlier in the week, it was up here, and we just keep dropping it down. That's why I don't typically like these vertical trend lines. They basically just tell you whatever story that you want to tell. But it is saying broadly, I know Microsoft has pulled very, very hard back over the last month or two, but this stock, believe it or not, is still in an uptrend technically, and it can reverse from here. I'm not saying it will reverse from here. In fact, I actually hope it doesn't. I hope this stock goes down. We just reviewed the financials, right? This is like, going into a Louis Vuitton store and everything being 80% off. You would absolutely love that, and you'd probably whip out your credit card and buy as much stuff as you can. This is like the Louis Vuitton of financials right here over at Microsoft. It literally doesn't get any better than this. So we'd absolutely love if this stock goes on sale, if the market takes a dump and just throws stocks like this out, because this is exactly what we want. And right now it is painting a little bit sorry. I've got this blue line. I'm going to turn it red because take a look. We're actually underneath that price action right now. This red line is about 380. Depends on where you want to draw this in. 280, 281, wherever you want to draw this in with Microsoft. The stock's down here at 275. I had this other green line, which was the previous highs. Okay, we broke through that as well. Okay, so when I change these lines red from green to red, what it means now is this is resistance on the way back up. So if this stock comes down here and then comes back up, it's going to find resistance, whereas previously it was resistance here, and then it came up here and it acted as some support really for just a couple days, but it boom, sliced right through it. This area right here at about $280 per share, that was an area of support just a little bit, just for two different times, and boom, it looks like we were going to slice right back through there. And so back on the way up, this is where your upside is. So when you think about buying a dip on a stock like Microsoft, just understand, yes, you can get it here at 273, but your upside is literally back up to 281, where it should find some resistance. Now, it could slice right through that like it has on the downside, but then again, you've got another level up here at about $300 per share, which should act as some resistance as well. So yeah, you do have $25 worth of upside. That's pretty good, but let's take a look at the downside. Man, there is a lot of downside in this stock. You've got some area of consolidation all the way back here at about $200 per share. I mean, we're talking way down here. Sure, could the stock stop in this range between 220 and up to about where it's at, 270? Sure, it can do that. These stocks can do anything they want. And where will we find evidence that it is reversing? And we need to start seeing higher lows. I want to turn your attention right back here. When this stock made highs up here at 305, it got rejected down here to about 280. And then notice what happens. We made a cluster of lows here, and then we made a higher cluster of lows here. We made even a higher cluster of lows here. And that was your sign of a reversal, okay? You came down here and bottomed. You made a higher set of lows. You could have bought here if you wanted to gamble a little bit, but really the full sign that this stock was reversing was actually a break above the highs at this cluster at 305, and it went from 305 all the way up to about $350. Now we've seen it come crashing back down, but we're looking for the same type of action with Microsoft. We need to get higher lows set into this stock. That's several candles up above the previous range. Right now, that range is right here, right at about $291 per share. We need to get above this area in order for us to even consider that this downward move, this is a steep downward move on this stock, and it is not getting any better. It's not letting up. In fact, it's accelerating in the after hours. So we have to assume in the coming days that that's what's going to happen with Microsoft. It's just going to continue to go down. That should make you excited when you see a sign of a reversal. You see it all over this stock chart. Lows, higher lows, higher lows. When you see successions of higher lows, it's not really just one grouping of lows. I like to wait for one or two. Once you see that, and if you want to couple that with taking out the highs of a previous area of resistance, that can be great too. In the shorter term, we're looking to get above 280 and then more specifically 289. That can signal a buy, although I think you'd find resistance up here at 305. What we're hoping for, honestly, is this stock breaks down very much and it comes all the way down here to this 220 range. If you can get this stock down south of $220 per share, I think you're basically committing highway robbery when it comes to the stock market. And how do I know that? How do I say that so confidently? Well, you sat through this video and you just walked through these financials off of $51 billion worth of revenue, net income after you pay everything, the government and your employees, you netted out $18 billion. Are you kidding me? That's unbelievable. And that is about as good as it gets in the stock market. And the only thing that gets better than that is when you get a major pullback in a stock like that. I would urge you to be patient. This is a mega downtrend that we're in, and until it shows a sign of a reversal, we have to assume that Microsoft is just going to keep doing this over the next couple days. But make sure you have a plan to get back into the stock. And if you want to follow here on the channel, every Friday we recap all the major FANG stocks, including Microsoft and Tesla. I go over the technicals every Friday. There are timestamps in the video. If you just want to skip to Microsoft and Microsoft technical analysis, I will be alerting you every Friday about getting back into this one, because believe me, I have cash sitting on the sideline where I am going to get back into the stock, and I'm going to get back into it in a major way. I say get back into it. I'm already into it. I'm going to add to it in a major way. That was Microsoft. Let me know down in the comments what you think. We'll be back again soon with more. Good luck with your investments.